We are in conversation with the management of Meesho. We have with us Vidit Aatrey, who's the CMD and CEO of the company, and Dhiresh Bansal, the CFO. Gentlemen, so good to have you on NDTV Profit. Now, Vidit, first question to you. When we talk about the business, e-commerce with delivery and logistics inbuilt, how is your model likely to differentiate and also gather momentum against the many peers and competition that you see in this particular market?
I think we have a very differentiated mission. Our mission is to democratize e-commerce for everyone, all consumers, businesses, people in the logistics ecosystem. And that's what we have done over the last 10 years. We have grown at a very good pace. If you see some of the numbers in the last 6 months of this financial year, our NMV grew by about 44%, orders grew north of 50%. So we're still growing our base really fast while we are already the largest in India in terms of orders as well as annual transacting users. Last 12 months, we had 23 crore customers transact at least once on Meesho, and we did 230 crore orders, right? Like both of these numbers are the highest for anyone. So I think all these numbers point to a very, very differentiated story. We have been very focused on making most of e-commerce affordable for our consumers. How do you help consumers achieve or afford a lot more of products than what was possible earlier? And we have done that across price points, across categories, across products. And that's what we will continue to focus on. Logistics, we have basically built our own platform, Valmo, over the last 3 years and scaled it now to basically have the highest amount of volumes for any e-commerce logistics platform. And it has been a big contributor to creating this lowest cost logistics, making stuff more affordable and getting more consumers onto a platform. So I think that is a very, very differentiated story and will continue to be even going forward.
Right. When you said across all categories, what is your sweet spot there with it when we talk about the price points as well as the category, where most of the earnings are really coming in from?
So I think when we started with a few categories. In the early days used to be more fashion. But the beautiful thing is the appeal of affordability works across all categories and all price points. People want to save money not just in one category but everywhere. And you see that happen more and more. So every year we have become more diversified in terms of our category base. One very good case study is home and kitchen. So 2 years ago it used to be 10% of our orders. Now it's almost 20%, right? Because it's a category that people buy very frequently. And as we became more efficient in serving that category, it has grown really fast. And more of such categories are growing really fast. So I think it's the appeal of affordability is everywhere. So I would say sweet spot is not just focus on one or the other. Our goal is to basically solve the problem of affordability across all retail categories.
But there's also that aspect of discretionary as well as discounts. So I'll come to that. But first to the valuation, Dhiresh, you're the man of numbers here, 50,000 odd crore rupees when it comes to the valuation of the company. Now, what is the rationale for this? What were the key drivers? And let me also put across the investor feedback that a large part of your valuation is being attached to your logistics business in in-house logistics, Valmo.
Yeah, so I think the framework that the board had set for us, was to get the highest quality investor base into the IPO. People who are aligned with our long-term vision, who understand our story and will continue to be good long-term shareholders. So like we have done even with our private investors who have continued to be our shareholders over a period of time, the same was the objective function set for us. I think at the valuation level at which we are kind of speaking, we expect amongst domestic investors, foreign investors, sovereign wealth funds, etc., we should have good traction coming in. And that's kind of the
Was the investor feedback and the market sentiment around the various startup IPOs we have recently seen and how their prices collapsed or there was outrage on valuation, had that anything to do with rationalization when it comes to valuation and also the OFS pocket being also cut down?
So I think from a overall market environment perspective, if you look at it, yesterday I saw that Nifty hit one of the all-time highs. I think generally the sentiment has been quite positive. I think investors obviously are looking for the first horizontal e-commerce company to kind of become public as a very differentiated sort of equity story for them. And a lot of them, again, take a very long-term view and not just kind of the next, few days or months of kind of trading that might happen in the stock. So again, like going back to, the objective function, get as many high-quality investors who are kind of aligned with our vision. And that's been the rationale for valuation. And,
the key drivers which are going to sustain these valuations even post-listing?
So I think what Vidit spoke about in terms of growth, we continue to exhibit very good growth, one of the highest in the horizontal e-commerce space. We have also been free cash flow positive. So not a lot of other companies in our space are free cash flow positive. Last year, if you look at it, we generated close to 1,000 crores of free cash flow if you include interest income. And even excluding interest income, about 600 crores of free cash flow. So as our business grows, we will keep on becoming more and more efficient, unlock many more monetization levers. So that's the rationale on which this is built. Most of the investors, at least those we've had close interactions with, forecast our business for like the next 3 to 5 years, look at what this business could be in the overall size. And then those future prospects, they kind of come up with some valuation to kind of...
Right. So as I said, a large part of SOTP with it is being ascribed to your in-house logistics business. Now, tell me, this is a pivot, and you have been a big disruptor in the business as well, with another company getting acquired with whom you had the largest client concentration as well. So it has disrupted the market, and it could really potentially disrupt the market further. Now, I wanted to understand, the market is expecting that this business to be not just in-house, but pivot as a separate business as well. Is there any thinking on that? And also, when we talk about the Valmo business, what is the potential that you're seeing? And investors are ascribing a lot of value. So what are the drivers there?
First of all, there's no plan for us to kind of externalize Valmo as an opportunity. Valmo is a very core strategic asset for us, helps our entire ecosystem become very efficient. So it will continue to kind of serve the Meesho ecosystem, and we have no plans to kind of externalize it. But if you just look at the value of Valmo within our entire business, in affordability, having the lowest cost is very, very important. And we have built Valmo as the lowest cost logistics ecosystem in India. And hence we are able to offer the best affordability proposition to our consumers. And that will continue to be focus area even forward. If you look at where India is today, India still sits on the lower end of e-commerce penetration among major economies globally. And one of the big reasons for that is India's cost of logistics as a percentage of average order value among the global benchmarks is still very high. So Valmo has a lot of opportunity to keep innovating around the cost structure, make more products, more categories affordable for our consumers. So I think that will continue to be a big focus area for us. So in that sense, yes, I think Valmo is a very core part of our value proposition, core part of the company that will continue to drive growth for us in the coming years.
Any other pivot expected from the company, from growth proposition?
No, I think as a company, we have continued to innovate, right? From day one, we have never followed playbook of someone else in the country. We have charted our own path. Valmo is a great example of that. Something like this never existed in India before. Content commerce in the recent past is also another example where we have enabled influencers to monetize their following for the first time. Now they're able to promote products of our sellers and basically drive sales. Over the last 12 months, 50,000 influencers are making consistent income on our platform. And for the first time, our sellers are able to get their products promoted from influencers, which they never imagined. They always thought that only brands could afford influencers, but not mass merchants. We have seen that change. So that's also driving a lot of growth for our ecosystem. Over the last 12 months, 1,200 crores worth of NMV came via content commerce on the Meesho platform. So I'm saying there are many things that we will continue to invest in even going forward. We've also talked about our Horizon 2 bets in our RHP document. We are investing in financial services for our consumers and businesses. Again, a lot of people are trying to offer financial services products to top 30, 50, 70 million people in India, but not many are doing beyond that. Right? But we are in a unique position to have a lot of data on these consumers and businesses, so investing behind it. So there are lots of these opportunities that we continue to focus on, innovate on, and we'll keep doing that even in the future.
All right, but one important concern in the market again has been the overhang of certain entries, accounting entries. Also, the reverse flip has had a huge impact. But all is gone now, Dhiresh, or is there going to be some recurring or spillover post the listing as well? Because this is going to be very critical for showing profitability after getting listed.
Yeah, so I think from our perspective, all of the restructuring which required us to kind of move from US to India has been completed. All of the tax payments have been done. So we don't expect anything further to kind of emerge out of it. I think whatever contingent liabilities, etc., that we needed to disclose have been kind of disclosed in the RHP document as well. But I think all of the restructuring related to redomiciling from the US into India has been done and is on the account of the existing shareholders versus the new ones that are now coming in.
All right, so all the matter over there is closed and no other tax reversal, anything expected in terms of accounting entries in the near term?
Nothing that we can foresee right now.
Right, and Vidit, my last question to you. The proceeds of this particular IPO, 1/4 of that is going into brand enhancement and marketing. Now, that's a key lever for either looking at profitability versus growth. So give us a sense a little bit on that and also the CAPEX requirements and how is this money going to drive growth for the new investors?
So first of all, we have been an asset-light company, very, very capital efficient, and we will continue to be so. So we don't see needs of any capital expenditures coming up anytime in the future. You're right, like we're going to invest a lot of our proceeds into marketing because, as I said, like our annual transacting user base is still growing at a very good pace. Like over the last 12 months, we had 23 crore consumers buying on our platform, and that number is still growing at about 30% year on year. And a lot of people in India still haven't come online and become part of e-commerce. So a lot of those investments that you kind of cited are focused on bringing the next 100, 200, few hundred million people online for the first time, create the right customer journeys for them, get the right kind of products for them. So that's a big focus area for us, and that's where some of these investments will go.
So your path to profitability is clear on that? Give us a sense on.
Yes, so we today monetize using our logistics platform as well as advertising. And as our platform keeps scaling, we continue to kind of increase the contribution margin from both of them. And we expect that to continue even forward. We today have very, very, I would say, attractive payback periods. Over the last 2 years, we've been able to like improve LTV of a customer while our CAC, which is cost of acquisition of a customer, has gone down, and which is why we feel it's the right financial decision to basically invest in acquiring more consumers because we're seeing good payback period. So I think we will keep doing this. We are very disciplined in terms of how we allocate capital towards growth in our business, and we will maintain that discipline even going forward.